Good morning, traders. Richard here doing a quick Ichimoku Cloud Chart market review of the S&P 500 E-mini futures contract. So far, so good. We got our rebound at that critical moving average, as well as this whole cluster of Ichimoku Cloud Chart support zones that we were looking at. And was vital for the market to stay above that zone. Got our rebound, then hit the turning line of the cloud, pulled back a little bit, and then made another attempt, broke through there, and now we are testing a couple of moving averages here, as well as this major moving average there. That's the 244 moving average, also a significant zone. We're now testing that for resistance, but at least we're above the turning line of the Ichimoku cloud, and now we're getting to key resistance levels. You can see the bottom end of the front end of the cloud here is a critical resistance zone. We need to break past that moving average, and then the upside target would be the 21-day moving average there, and as well as the standard line of the Ichimoku cloud. That 5837 is the upside resistance target, and that coincides well with the top end of the front end cloud chart resistance target on the daily. So these are the upside targets for the next week or so, and at least we did get our rebound from this cluster of support. So far so good, but we're not out the woods yet. To be bullish on the daily, we ultimately need to be back above the top in the cloud. So this is a technical retracement rebound rally just after this incredible sell-off. Incidentally, this zone here is also a resistance zone, a previous cloud chart support zone, so watch out for these levels here. That can also come back to haunt us because they were good support levels on the way up. They failed a few times on the way down, so watch out for these resistance levels here. We're now close to a cluster of resistance once again. This moving average, we need to break past that zone, and then we've got the top end of the front end of the cloud to deal with, as well as the standard line of Ichimoku. So we've got our upside resistance targets. The downside risk remains this support zone, but so far so good. We're close to critical levels, and we need to see a breakout past those zones to activate the upside targets there. So we look out for the top end of the front end of the cloud to be the next key resistance zone, as well as these cloud chart levels. Let's take a look at the weekly Ichimoku. There's a really big picture perspective there. Successful rebound. To the last update, we were looking at the support here, and that was a great area to take a swing trade to the upside, and now we're getting close to the top end cloud chart resistance level. So watch out for the top end of the front end of the cloud, 5853 zone, to come back as resistance, and the top end zone there, that area there as well. 5918 is also the upside resistance targets on this weekly Ichimoku cloud. But so far so good. We got our rebound while testing the top end of the front end of the cloud, and now we just got to watch out what the interaction will be with when the futures get back to the front end of the cloud resistance zone, as well as the standard line of the Ichimoku cloud there. Just take a really big picture perspective. If we look at the monthly, we can see we're really not out the woods there. This correction only really started on the monthly basis. You can see we haven't even touched the front end of the monthly cloud. So there's still some significant downside risk, something similar to what we can see here. Maybe this is a relief rally now, and then we can get another sell-off to hit the standard line of the Ichimoku cloud. So watch out for these monthly downside targets. That's the big picture risk. If there's any kind of slowdown in the economy and a recession hitting us, we'll be down at these levels pretty quickly. But the market is still extended from the top end of the cloud on a monthly, but so far the weekly one is fine. We got a nice little rebound from close to the top end of the cloud there, and on the daily now, as we've highlighted, the key levels to keep an eye on, as we need to grind through these resistance levels to the upside to complete this kind of downward Fibonacci retracement. A big move down and then up to a 50% retracement would be healthy in this current market. Now, things to watch out for on the 4-hour. Let's take a look where we are there. So far so good. We've just peeped above the 4-hour Ichimoku cloud. Now, 4-hour trend is starting to show bullishness, so as long as we stay above the top in the cloud, we should be okay. But it is possible for the index to go all the way back down to test these levels for support. You can see there how the standard line of the Ichimoku cloud gave us another couple of swing trade opportunities to swing trade from these support levels back up to the resistance at the top end of the cloud. We're now broken through there, so as long as we get a sustained rally above the top end of the cloud, that should be okay. And then we're looking at these upside resistance targets, these on a cloud chart basis to the upside to give us an idea as to where this rally can run into resistance. But so far so good. It's starting to emerge on the 4-hour that we might be having a bullish rally on the 4-hour Ichimoku, and on the 60-minute one we can see there's lots of swing trade opportunities there as we do these cloud chart crosses there. Turning line, a standard line rebound there. So you see how the standard line becomes a key level of support. Another cloud chart cross rebound there to the upside. So plenty of swing trade opportunities as we cross the cloud to the upside and downside. But so far so good. We're now back above the top end of the cloud on the 60-minute Ichimoku cloud, and that is bullish. 60-minute bullish, 4-hour. It's critical today for the 4-hour to remain above the top end of the cloud for the next couple of days to confirm the bullish stance on the 4-hour, but it's still bearish on the daily, but the weekly is still bullish on that side. So keep an eye on those key levels. Watch out for the interaction at these resistance zones. Until next time, happy cloud chart trading. Bye for now.